Here at the 2017 Silver and Gold Summit, I'm joined by Steve Stacku from Trevally. How are you today?
Doing very well, thank you.
So Trevally's undergone quite a transformation this year with the Glencore acquisitions of the African mines. We were pretty early on the zinc story, and Trevally looked like the go-to company because there's not too many primary zinc producers out there.
Correct.
So could you give us an update on what's ahead for the company after you now have 4 mines in production, so what's next?
Thank you. Yeah, really, as you touched on, it was a transformational event for Trevally, acquiring the 2 additional zinc mines in Africa from Glencore, who have been a strategic partner of ours since about 2010. Glencore is now a very large strategic shareholder in the company, owning just over 25%. Certainly, have a vested interest in the company, and they were the owner of the assets that we acquired in Africa. Certainly, we're just in the process of integrating those assets currently. We just closed the transaction just about a month and a half ago, and everything has been going very well, very smoothly. And I think from this stage going forward is just to more or less solidify Trevally's position as the premier or global marquee mid-tier zinc producer. With the 4 mines now, we'll produce on an annualized basis about 400 million pounds of payable zinc, about 50 million pounds of payable lead, and just shy of 2 million ounces of payable silver as byproduct as well. So certainly we've really cemented our place. I think we're currently about number 7 or 8 globally in terms of zinc production. Where we think these assets can go, I think there is a lot of organic growth that we can extract out of these. We're currently very active with the drill rigs on all 4 projects. We do see the potential in the near to medium term to increase production from them, kind of on maybe the 10 to 20% basis, and maybe looking further afield, doing some regional exploration around there, kind of more of a medium-term growth pipeline for these assets. So certainly we see them as nice cornerstone assets for the company, and will help solidify our position in the zinc space.
Great. So not too long ago, a PEA came out of a combined half-mile strap mat operation. Where does that go in your pipeline? Are you guys going to do a feasibility study first? In the meantime, pay down some debt? Can you shed some light on that? Absolutely.
Yeah, we just recently put out a preliminary economic assessment on our half-mile strap mat deposits in the Bathurst mining camp in New Brunswick. Really, those will probably form more of a medium-term growth plan in the Bathurst mining camp where our Caribou mine is currently operating. We looked at 2 development scenarios, one of which was to build a second standalone mill tailings complex to process ore from those 2 deposits. The alternate was to look at sequencing that ore through the Caribou mill once you've exhausted the Caribou ore body. I think from a kind of a conservative aspect, you would probably look at the second one. You would leverage the infrastructure you currently have in place and your technical teams as well. So I really would look at that as more of a medium-term growth pipeline for the Bathurst camp. There will be additional engineering studies and updates to this going forward, so we will be updating that as we progress. But I think if you look at it, as more of the VMS camp-based philosophy, so we currently control the only mill that's operating in the province of New Brunswick. So certainly we look at both our Caribou deposit, and we have a lot of other satellite deposits, inclusive of half-mile strap mat. So we really do have the major footprint in the camp. We control all the major infrastructure. So we'll look at these as maybe potential satellite operations, kind of in the medium term going forward.
Excellent. So now that we've got the update out of the way, what is your or Trevally's outlook on both zinc and lead prices?
Yeah, no, very good question. Certainly, zinc has become very topical, certainly garnering a lot of mainstream financial media coverage out there. A lot of that is predicated just on supply deficits, with the big marquee mines that have closed over the last 3-4 years. Close to 10% of global supply has come offline. There's not really much in the pipeline to offset those deficits in the near to medium term. As we all know, big mines take a long time to get into production, arguably several years plus. So there really is nothing big in the pipeline that's going to plug that deficit currently. So we're optimistic that zinc prices are going to stay pretty strong going forward. I guess sort of wait and see beyond the normal zinc cycle, which could be kind of 3 to 4 years. Maybe this one could be stronger for longer. Certainly we're looking to position ourselves for that. Lead as well. Lead tends to track, with zinc. Most lead production globally is as a byproduct of zinc production from zinc mines. So naturally, as these zinc mines have come offline, that's taken a lot of lead production as well. From a usage aspect, lead is a bit different. A lot of it is used in battery technology, so that's still a very high demand. Whereas on the zinc side, it's more for galvanizing, for infrastructural steel, galvanizing, anti-corrosion, automobiles, etc., which still has very strong demand. I think on both sides, the demand curve going forward look pretty strong. We're seeing year-on-year annual growth in the zinc consumption globally is about 2 to 4%, depending on GDPs any given year. And I think a good way to demonstrate what that is that's about 250 to 500,000 tons of new zinc needed every year. And that's the size of a tier 1 mine globally. That's getting close to a Red Dog size, which is the world's biggest zinc mine. And they're simply not out there, so nobody's finding them and building them. So I think that speaks that the zinc rally could be a prolonged rally, and certainly that's what we see going forward.
I believe the last time there was a zinc deficit in the 2000s, it touched $2 a pound. Do you think that it is likely this time around?
Yeah, no, I think let's wait and see where zinc goes to. I think as the deficits continue, as zinc inventories continue to get drawn down, and I think we're now kind of globally in terms of LME, Shanghai, and bonded warehouse inventories, we're below 10 days of global inventory there now. I think we're close to a trigger point where you could see a pretty dramatic reaction in zinc prices. You were correct, back in, I think it was in 2006, zinc prices got up to about 205 as inventories dropped to kind of that 100,000 ton level. We're currently at about 220,000 tons. So we'll watch as inventories get drawn down, but I don't see any reason why zinc couldn't react similarly this cycle.
Excellent. Well, thank you for your time today.
My pleasure. Thank you very much.
Hello, I'm David Morgan, publisher of the Morgan Report, and as some of you may already know, the Morgan Report is about money, metals, and mining. In fact, we cover all resources from rare earth elements to precious metals. I've been publishing on the internet for about 20 years. My primary passion is to help people build and preserve their wealth. I love to make people millionaires. I've helped thousands of people via our research in the Morgan Report, which has thousands of paid members and 10 times that amount on our free weekly updates. Here's what you'll receive from our free newsletter: to-the-point webinars, weekly analysis of the financial markets, interviews and our conference schedule, special reports such as riches and resources, and various metals price forecasts. Our paid service client base is primarily small to medium-sized business owners, professionals in the industry, or the seasoned investor who understands markets and the value of precious metals. My area of expertise includes equity analysis throughout the resource sector, energy metals, base metals. We cover startups to billion-dollar corporations. We focus on a special sector that makes money regardless of price oscillations, and the importance of precious metals due to the ongoing currency devaluations. Our team of 3 analysts and support staff can help you build and protect your wealth. It's important for you to know what other people have said. We're passionate about what we do. High integrity and trust. Tell the truth and own it. For wrong, we admit it. Take a long-term outlook with major assets, and bet a little to win a lot with speculative situations. If you choose to become a client, you will gain financial insights very few, even professionals, recognize. You'll understand the importance of honesty in our financial system. You'll understand how the money system influences almost everything in your life. You'll be prepared for the ongoing currency crisis. And finally, I've chosen to make my life's mission greater than the individual, which means my mission statement is to teach and empower people to understand the benefits of an honest monetary and financial system. It's been a great journey so far, and the best gains in this sector lie ahead over the next 3 to 5 years. I'm fortunate to have earned the status of being a leading authority in my field in helping others protect their wealth. You can email me at support@themorganreport.com or call my office at 480-325-0230.